Hey guys, how's it going? You guys all circle jerking over there? What's going on? How's the bull euphoria? It doesn't matter. It's a meme stock, right? Look at the price action. It's a meme stock. You guys are all invested in a meme stock. It's up. I would recommend selling, but you guys aren't. So you're gonna write it back down. It doesn't matter. It doesn't matter. You guys are gonna lose more than the bears. It doesn't matter. So go ahead. Go ahead. You guys will never sell. If it goes up to whatever price, they'll never sell. That's why you guys aren't professionals. You are useful idiots in this experiment. That's all you are. You will never be able to sell at the right time. You always sell at the bottom and buy at the top every single time. So enjoy the ride down, dude. If you don't sell out now, I'm just giving you free advice. That's it. You're making all right? How much money do you make, Yasmin? Yeah, man. You want to talk about that? You want to talk about me and you? I am, but it was a small part of my. I can just double down. I don't think you understand. The fundamentals aren't there.
I mean, first of all, like, dude, what the hell's going on? Are you like, did you wake up on the wrong side of the bed or something today? Let's go to Alexander.
I'm just saying, as a
Yeah, Magic. I think the Bears are pretty much the meme right now. So, yeah, that's all I have to say about that.
Okay, Bull 2035.
Yeah, Habib, who's a great supporter of this space, has some wonderful exercises, mental exercises on relaxation that Magic may want to look into.
Right. Hey, Magic, question for you. In Q4, and let's say 2025, how many deliveries do you expect 2025?
this stock doesn't trade on fundamentals. The fact that you're even pretending at this point is hilarious. There's no fundamental question here. A mega cap doesn't move this fast for like that isn't a meme stock. That there's no fundamental analysis here. So it depends on how many monkeys can buy call options. That's the game you're playing. This is a casino. So if you don't realize this is it's a casino masquerading as a legitimate stock. Everybody here is laughing, but you can push the stock price up for a while, like AMC and GameStop. Congrats. How did that end up? How did that end up, everybody? But go ahead. I don't care, dude. I mean, I'm not the one sitting on fake gains, pretending like you're rich. You're not rich because you don't sell. So everybody here is fake rich. And when you lose that money and it disappears forever, there's no, it doesn't matter. I don't sit here and bet against the bulls just to see you guys lose money. That's not the point. The stock is overvalued. If you want to be
Man,
in the middle,
you
that's up to
sound
you.
You sound like machine.
This is not, for some reason they hate the shorts as if we're dude. I don't sit here and think about any of you bulls. I don't care. I think the stock price is overvalued and that's it. And guess what? If it goes up to 400, I double my position. And what?
Okay.
Guess what? If it goes up to 400, you guys will never sell. It doesn't matter. It's just fake gains unless you sell it. Nobody's worried, bro.
Dude, if you need some therapy, this is not the place. Alexander?
Yeah, Machine is actually fake mad, but you are real mad. That's even more funny.
Bull?
Yeah, I don't understand the AMC GameStop comparison. I understand you think Tesla's overvalued, but Tesla makes profit. They have products. They're actually doing stuff and they're growing. So I guess my question for Magic is, what is your value? What would you price Tesla
at? Around $50 to $80 a share, depending on various factors, sales. I mean, $50 to $60, let's say.
Okay, cool.
I'd like to hear anybody's fundamental analysis based on actual numbers and actual products, but that doesn't really. It's hard to quantify without fake products.
James Cat put out a forecast that we went through yesterday in Tesla Live. We had a Sunday edition, episode 221. This is on YouTube. Magic, did you read through James Cat's forecast and our analysis of it yesterday?
No, I didn't. I mean, again, these movements are not based on fundamentals. The fundamentals are
Okay, so
deteriorating.
you didn't read through the James Cat forecast, but you're saying nobody has a forecast. Luce, what do you think about this price action?
Well, first of all, I don't think it's the top, just because it's 60% up instead of 10%. It means it's the top. Come on. And other than that, I will not sell before seeing V13, because V13 can be a huge improvement. And if V13 is close to 600, 800 miles for critical intervention, I think the current valuation is more than logical, honestly.
Okay. So Magic is short, I guess. Bull 2035. Are you adding shares here? Are you playing or reducing exposure to Tesla?
I maintain a long position in Tesla that's, fairly significant in terms of dollar value, not so much percentage value of my portfolio. I had sold puts, which is a bullish move, some time ago. I bought those back too soon. I wish I waited longer. So I have never, I would not short Tesla. No.
Why wouldn't you short Tesla?
You've got a company that makes legitimate products, that has the number one vehicle sold in the world. They're doing a refresh on that vehicle, which is going to be, I think, quite impressive. You've got energy, you've got all this AI, you've got FSD licensing opportunities. I mean, I think it's crazy to short a stock where you have so much explosive opportunities.
Again, just somebody
But
that doesn't
even
understand
Magic,
investing and their math.
Stop. You have to raise your hand like everybody else. But Bull, even with everything you said, it's possible that the stock price can rise above and beyond what's reasonable, right?
Oh, for sure. But see, when I look at shorting a stock, which I do, I look at fundamentally broken companies. Tesla is a strong company.
But even strong companies, fundamental strong companies, with which I think Magic would disagree. But let's assume, for example, that the fundamentals are really strong, strongest ever, right? Even with that, you can have stock prices above intrinsic value.
Oh, for sure. Of course you can. It goes in waves. But the problem is, when you're committing to short a stock, it just, to me, it's too risky. Everyone's different, but I would not short a fundamentally good company.
Why is it riskier than buying a stock?
Oh, why is shorting? Well, I guess it depends on how you short. If you're simply buying puts and you're out that premium, I guess it's not that big of a deal. But I'm thinking about those who outright short it, because Tesla could double, triple, quadruple. We don't know. There are so many growth opportunities. I just habitually do not short growth stocks. It's just too risky.
Okay. Magic, are you going to be able to kind of just speak in a calm manner and just really focus on answering the question? Or, I mean, if you're going to be kind of off the ball, like off the wall, then just move yourself down to listener so we can move on to other discussions. But if you want to be, just calm, then you can go ahead.
Okay, I'll be calm. But yeah, so I think fundamentally, the fundamentals aren't. I'm not saying that the company's horrible. I'm saying the company's overvalued. It's like saying you're betting on Kansas City, and whatever the spread is, you're going to bet on Kansas City because they're a good team. Sometimes the spread gets so crazy where the math doesn't work out. So that's all we're betting against. I'm not saying Kansas City sucks. I'm just saying the line on Kansas City winning is crazy. That's all we're betting on. You don't get paid to buy good companies. That's not how stock investing works. Stock investing works on expectations and reality. You can make money investing in a bad company, you can lose money investing in a good company based on how much is priced in. That's a lesson that many people will learn.
Okay. Angela, welcome. How are you?
Thank you for bringing me up. I'm doing great. Hope you're doing well, everybody. Regarding Tesla, I don't know. Obviously, I'm very bullish on the stock. I think we've had a tremendous run, and I think we're going to continue. So we have a lot of momentum in this stock. So I don't know why anyone would want to short this. Yeah, we've had a great run, but we've had a tremendous number of years of struggling as well. And just a reminder, November is one of the most bullish months out of the year. And if you take a look at the sector of the XLY, it's in a breakout mode right now. So I don't know if you're shorting Tesla here. Good luck.
Angela, would you ever short Tesla?
I mean, when interest rates were going higher, that was the greatest opportunity to short. And a lot of people made a lot of money off of Tesla shorting the stock. Here, when we have interest rates now going down, this is not a time I would ever put that risk in front of myself, including, again, back to the momentum. When you don't have momentum in a stock and it's just flat or, the market's going down, that's the opportunity to short. But I don't know, not here right now. I wouldn't do it. Going into year end, Santa Claus rally, coming up. Maybe the week of Thanksgiving could be typically is a little bit of a weaker week. Maybe that's an opportunity to maybe do a scalp short or something like that. But I think we're going much higher. And I made a killing today. Just saying.
Magic. Angela says that this is not the time to short because this is seasonally. We're going to Santa Claus rally, some sort of seasonal, calendar effect, tailwind to all stocks. And she also says that interest rates are going down. If you want to short Tesla, the time to do it was back in end of 2021, like when Elon sold. What do you say?
Yeah, firstly, I mean, congrats on the gains. It's only a gain if you sell again 100 times over. You didn't make any money unless you sell, first and foremost. But congrats. If you do sell, then congrats to you. But if you didn't, then don't count your chickens too fast. But yeah, I mean, look, yeah, usually retail traders buy when things go up and sell when things go down. So that's the only logic that it seems to be prevalent here. The main thing is that, yeah, Warren Buffett also says buy a stock after it has an 80% run. I mean, I think that's what the intelligent investor is all about. You guys can do whatever you want. I mean, keep buying, sell puts. That's fine. Let's see how it's going to turn out. I mean, we'll see. We'll see in time. We'll see. But yeah, I'm shorting on valuation and I'm pretty comfortable.
Okay, Magic is short on valuation. Angela says maybe Thanksgiving she might consider shorting, but right now is not the time. The stock is hitting higher. Angela, do you have a price target for Tesla?
So today we got okay, can I just address real quick before I address the price target? I just wanted to say, so I am a long-term investor of Tesla since 2014. And in terms of when I say, whatever, I made a killing today, that's using the derivatives. Okay, so as an option trader, I do trade options every week on Tesla. So right now, I always look at the market maker move and I look at the average true range. If you look right now, the average true range is 337, and it just hit and took a really big leap off of that level. So we are just toggling between the 337 and we got the rejection off of the 350s. So once we can hold the 348s, I think we can easily go to 400 this week. So next week we have a $44 move, and this week we had a $32 move. So if you swung any options or whatever, which I did on Friday, we had this big gap up. And I trade like that quite frequently. So I love Friday to Mondays in a bull market. So what's my overall target for the end of the year? Quite honestly, a minimum of 500. Minimum by year end.
Okay, so Angela's price target is 400 this week, 500 by year end. Okay, Luce.
I think that the only way somebody would short Tesla if he believes that the AI will not succeed, if FSD will not succeed. So I wanted to ask Magic if he believes that RoboTaxi will be successful, if they will be able to implement.
Okay. Before I ask Magic that question, can you define success?
Well, first of all, obviously, it needs to be able to be more secure than a human, like at least 100,000 miles for critical intervention, something like that. And then from the regulatory point of view, obviously, you need to be able to put it on the roads.
Well, 100,000 miles for safety critical intervention is not safer than human, right?
Sorry, I didn't understand. It's not?
No, I don't think it is. So what's your your definition of success, Luce, for FSD is FSD with cameras only, get into better than human safety. Magic, do you think that's possible in the next few years?
Absolutely not. I don't think that's possible. There's already people doing robo-taxis and they're not really profitable. You think that you can just take a bunch of tech and just kind of do a cowboy way of thinking? I mean, unleash this technology on the road, so many people will be dying. It'll be pulled off pretty quickly. So, I mean, look, with Trump in office, it could be approved. I'm not saying no, but wait for one famous person to die using the software, and we'll see how fast that gets reverted. You can pretend, you can lie about how safe it is, but once the statistics come out, once people die, then people will be assessing it. That's it.
Okay. Some people are reporting audio issues on X, but YouTube seems to have real good audio. So you can head over to YouTube if you have issue with X audio. Head over to YouTube through the link at the top of our screens. Alexander?
One accident for every 500,000 miles is correct for the US. However, for Europe, that is one accident in 1 million miles.
Yeah, Lucia, I think 1 million miles per critical intervention is necessary for RoboTaxi service. So when do you think that's going to happen?
I don't know if it's really necessary, honestly, to go to 1 million, because at the end of the day, whatever problems there is, basically you can remotely guide. Waymo is at 1 million. I don't think so, right? So you don't really need that much. But so
many people. Yeah, I think Waymo in the areas where they operate is actually pretty good. And it may not be 1 million, but it's pretty high. And they haven't yet achieved mass adoption. They're not profitable. They haven't achieved mass adoption. People aren't really using it, dropping their cars to use Waymo in those areas. They're not really that competitive with Uber. So this robotaxi service has to be better than other options to achieve mass adoption. It's not just like if you go 5 miles an hour, 25 miles an hour, you kind of in this block of area, you can do fine. Like that's obviously not for stock purposes an important milestone, right?
No, I mean Tesla will win basically only on price. Like it doesn't need to be better than Waymo. It needs to be good enough. And then obviously it's gonna cost 1/3 to get a ride on a robotaxi or whatever. And Waymo, it's out of business automatically. So no, it doesn't really need to be better, in my opinion. Just good enough.
Okay. Before I go to Magic, Luce, what's your price target for Tesla stock?
Look, so right now, I think a good price target would be 220, 240, something like that. But if V13 is really special, okay, because the specs are insane on V13, okay, if it's special, if it quadruples or more the miles before critical interventions, then the current evaluation is more than logical, because we know that from the legislation point of view, the Trump victory will ease the deployment of robotaxis. So it's only matter of the software. If the software advances fast enough, then the current evaluation might be even not enough.
So what is your probability estimate for V13 having better than human safety critical intervention performance?
I don't think V13 will get there, but I think it will be a significant increase.
Yeah. I mean, it sounds like we agree. I think a lot of people agree here on the board. It's just kind of the way people are saying things is a little different. But so you don't think V13 is going to get to better than human critical safety? So Luce, when Ashok says they're going to launch FSD unsupervised in Q2, do you think he's wrong then?
No, because they will like geofence the FSD like they did on the AI day. What was called it? Was called the WeRobot. Yes. So they will do something similar. So I think it's possible they can reach like a good safety standard there. Yeah, but obviously, if you don't think it's ever going to happen, obviously short the stock. Obviously, you don't think it's ever going to succeed. Obviously, you can short the stock and be happy with it. But I don't think that.
There you go. Angela, Lucia says that if you don't think FSD unsupervised is going to happen anytime soon, then you should short the stock. Are you going to take Lucia at his financial advice?
No, I'm not. So I had my hand up because the question that I had was for the fundamentalists out there. For the decade prior to 2020, were you also focused on fundamentals in a growth momentum decade? Because we could be going right back into that mode right now as we enter into quantitative easing. Many of the growth stocks out there.
I don't think anyone believes quantitative easing. Do you think the Fed will switch from quantitative tightening to quantitative easing in the next few months or years?
I do. Under Trump administration, I do. I think they're going to find other ways to cut. And Trump has always wanted a weak dollar, and he'll find global opportunities. And with Elon having a position in efficiency, I think I'm just really happy around this administration. And yeah, I think they are going to do quantitative easing. I think their interest rates are going to come back down. I hope they don't go under the 2% as we had before, but I do. Not that the printing presses are going to start anytime soon, but I think people might be surprised. The market means a lot to Trump.
Okay. Before I get to, I'm going to ask Magic in a second, but right now we have more viewers on YouTube than on X, which is a first in Tesla Live history. If you're watching this on YouTube, please take a moment to hit the like button and subscribe to the channel so that we can continue to bring you Tesla bears like Magic. Angela says, were you focused on fundamentals back in 2019, 2022 as well? Because the stock went up 20 times as you were maybe focusing on the bottom line. What do you say to Angela?
I wasn't shorting the stock back in 2019. No, I wasn't paying attention to this. I only started paying attention to this sort of stuff in 21 when there was an obvious bubble. Just because things go up doesn't mean much. Things can go up for quite a while and then revert. So the S&P is trading at 23 times earnings. I don't think that Trump can save the massive budget deficits, and if he does cut taxes or do any or lower interest rates, the long end of the bond curve is the 10-year is going to go to the moon. And if people understand how the bond market works, is that's how we borrow money. So kind of stuck between a rock and a hard place. It's not 2021 again, where you can just print money without any consequence. This is a very different market. This isn't 2017 where there are no issues. This is late cycle with a huge debt load and inflation rearing its head, plus geopolitical issues in the red, screaming right now. So if you think that Trump's going to fix every single
Magic,
problem in the world,
let me ask you something. If you think geopolitics are at extreme all-time highs, why is the oil price so low? But before you answer that question, if you're watching this on YouTube and seeing ads, that's because you don't have YouTube Premium. I think YouTube Premium is worth the money of time saved not watching ads on YouTube. And there are other benefits as well. And you still have the channel as a YouTube Premium member. So I highly recommend people like the two. I don't really subscribe to a lot of things, but on YouTube and on X, I subscribe to Premium. So I recommend doing that as well. Magic, why do you think oil prices are so low if geopolitical risk is so high, as you say?
It's a good question. Firstly, I think the U.S. is producing more oil than they ever have. So they're just hitting the supply button like crazy. I don't know how long it can go, but they're just oversupplying the market right now. And I guess, yeah, it has to do with, if you really thought that the world is going to be fine and demand is going to go up, then oil should be going up. Oil staying low, maybe it's short-term price dislocation because of the U.S. is oversupplying the market. But if you do believe inflation is going up, oil is not believing you. And that should worry any investors, that oil should be going up if we actually do believe that inflation is going up, because that is the direct barometer of financial transactions.
Alexander.
Yeah, oil being low is not good for the US because it's more expensive for US to pump oil than it is for like the other countries in the Middle East, for example.
Well, I mean, US still consumes more oil than it produces, as far as I know. So low oil prices are good for net consumption from a macroeconomic perspective. But I think what you meant maybe was oil prices going down is not good for oil producers in the US. Is that what you meant?
Yes, we've had people working in the oil industry telling us that before in the space.
Yeah, Bull.
Regarding oil, we've been a net exporter of oil by a low value since 2021. But I also don't know how the Russian cheap oil that's getting into India is affecting this, because then India is getting less oil from other countries on the free market. So that may also be artificially keeping it low. But I'm not an expert in that area.
Yeah, US has been a net exporter, but still a net consumer, right?
That may be. It's a quarter by quarter thing. I just know that we currently produce more than we consume. But
I don't think that's true. I don't think US produces more than it consumes. Let me just check the data real quick.
And Yaman, you might be right. I guess just to be clear on what I'm saying, we export more, which is I think around 10 billion barrels, and we import around 8.5 billion. But you're saying we consume more than that difference.
Right, exactly.
You may be right.
Yeah, US consumes about 19 million barrels of oil per day. What did you say is the production?
I believe
20 million barrels per day in 2024. Yeah.
It's very close, and it wasn't historically, but we're very close now. Yes.
Production is about 13 million barrels per day. So that's a big difference. The US is still a net consumer of oil. So for the economy, or lower oil prices are better for the US economy. But okay. But back to the topic. Magic was saying that geopolitical risk is very high. Clearly, the market doesn't agree with Magic because oil prices are low and actually going lower today, $68 per barrel for WTI. And this is good for inflation, obviously. Okay. Magic, do you think maybe Angela is right that interest rates are going down, which is going to lift all boats in the coming years?
I think that would be a correct assumption if we weren't running such a huge deficit, and had valuations at this extreme. I mean, we're already at the extreme levels. On almost every metric, the stock market's overvalued. Price to sales, price to earnings, anything fundamental, the stock market's overvalued. Can it get more overvalued? Yeah, of course. In the short term, it can. But long term, it's already everything is already priced in 3 times where it should be. So that you got to understand where we're starting from. I think from a normal valuation standpoint, if he cuts taxes and lowers interest rates like he did in the first administration, yes, it would be a boon to stocks. But at these extreme valuations, it's really hard to see how much more juice it is left in that squeeze. But we'll see. And even if he does,
do you trade treasuries as well?
I'm not buying the long end yet. But I mean,
are you shorting the long end?
I'm not shorting the long. I'm not touching the long end. Yeah, okay. That's a tough trade.
Angela, do you trade treasuries?
I do not.
Yeah.
But can I address his deficit topic?
Yeah, actually, I do want to focus on that because there's quite a few people right now, quite a few asset managers that are well known. They've been around for a while. They're starting to talk about shorting the long end of the treasury curve. So that would be betting that 10, 20, 30-year treasury yields are going to continue higher to 5% and maybe above. And that's what Magic is pointing out. And the primary reason for such a potential huge surge in interest rates on the longer end of the yield curve would be the budget deficit, which is set to grow higher with Trump's tax cuts and other things that he wants to do. So what do you say to that, Angela?
Well, okay, so I agree. I mean, I do have a very strong focus on the 10-year yield, and it is concerning. I think if anyone is not concerned, it is something that we need to keep a close eye on. But it has not started surging by any means, right? We got to 4.4 high, then we pulled back down to 4.2, I think. So we're not surging yet. So I'm not nervous about it yet. I guess I can say that. So I look more at the 2-year 10 than other than the 30-year or whatever. Yeah.
Okay, Magic. Angela says that even though there's a potential that these long end yields can surge, and that would, push the brakes and put the brakes on the economy and stocks and other assets like home prices, etc. She says it's not happening yet, and she's right. Even though after Trump got elected, we saw a 25 base point surge in yields, that all has come down since then. We're back to pre-election levels now. What do you say to that?
I mean, yeah, we'll see. If he does cut taxes, I don't know if the bond market's going to like it. If he does cut interest rates, I don't think right now, especially when financial conditions are very loose, I don't think the bond market's going to sit there and just let people print in their face. That's where we're seeing more bond vigilantes. And if the 10-year does go to 5%, I want to remind everybody that's when the banks started failing. So there's a lot of things that are affected by a high 10-year. And if you print money, then the 10-year goes up. Like that's why it's hard. It's not an easy situation. I understand. In 2017, it was a very easy situation to print money. You didn't have inflation. Inflation is the thing that's stopping you from printing money. And everybody needs to know that the 10-year is what the 30-year mortgage rate is based on. So if the 10-year is going up, that means housing lending is more unaffordable, and that means people probably aren't going to buy houses, or housing prices have to come down. So it's a really tough pickle on either end. If you print too much money, the 10-year goes up. So that's where we're at this point because we've printed our way into this. So we have to maintain this insane level of spending and printing to hold it up. and the bond market at one point is going to just not fund these deficits. So who knows when that day comes, but it's not looking good.
Yeah, but you didn't address Angela's point that it's not happening just yet. I mean, Trump has said very clearly he wants to lower taxes still. He wants to extend tax cuts. He wants to lower them even further. He has all the power to do that pretty much at this point, except if bond vigilantes, like you mentioned, show up in mass, but they haven't. And Trump has been very clear on what he wants to do. So if they haven't yet, what makes you think that bond vigilantes will drive bond yields higher in the coming months?
I mean, yeah, well, I mean, it's yet to be seen. We'll see how the bond vigilantes how the long end of the bond of the yield curve likes the Fed, like the government printing money in their face, right? So they're pretty much estimating how much money they're going to print. The sovereign government's going to print. So if they assume that it's more, then they're going to sell off their bonds. So I don't know. We'll see. It's all depends on the bond market, right? If the bond market's okay with them printing money, then she's right. I don't know what to tell you. But at a certain point, bond investors are going to want a higher return based on the higher expected inflation. So we'll see. I mean, maybe I'm wrong. Maybe the bond market's wrong. We'll see. But yeah, maybe the bond market is not pricing in that risk accordingly, and we're going to see soon.
Okay. Henry Abanto in YouTube live chat says, by the way, people keep reporting that YouTube audio quality is much better right now on X. So highly recommend people go to YouTube through the link at the top of your screens, where you just reached 200 likes and 200 concurrent viewers on YouTube, a first in Tesla Live's history. Henry Abanto says, if the market feels like growth and a great economy is what's in the order for the next 4 years at least, shouldn't S&P valuation reflect that? Why would Magic look at the past and use metrics that are applicable to average market conditions when the market is screaming that we are entering a world where AI, deregulation, lower taxes, lower rates, and less inflation leading the way? Before Magic answers that question, I'm going to give a quick shout out to our sponsors. Tesla Live is proudly sponsored by Paymore, your trusted destination for buying, selling, trading, and recycling electronics. And Paymore gave me a MacBook Pro that is hosting this space. So thank you, Paymore, for making it possible. And Tesla Live is proudly sponsored by Joa, your go-to source for premium Tesla accessories. Use promo code TSLA Live at checkout to receive a special discount on your next purchase. Magic, what do you say to Henry Abanto? He says, great things are ahead. Productivity growth led by AI, deregulation, lower taxes, lower rates, less inflation. Why are you so focused on the past? We just had the regime change, Henry says.
Yeah, I mean, just for everything, one, I think that's already priced in. So it's not what's going to happen, it's what's priced in. Everything's about expectations and reality. Expectations are extremely high. So all that's already priced in. So it doesn't really matter. If the stock market was, trading at 4,000 and this happened, I wouldn't step in front of it. But at this price, I mean, we're pretty much in euphoria at this moment. And also, if all those things were to happen, a lot of the spending, the tax cuts, interest rate cuts, then the bond market probably is going to react at some point. So there's no free lunch here. Everything's already priced in. It's hard for it to stay more expensive without printing a bunch of money, and it's hard to print a bunch of money without the bond market throwing a temper tantrum. So place your bets.
Right, you're just repeating yourself. You're just repeating yourself. Do you have any new thoughts, Angela?
I mean, yeah.
I guess my question, so Magic, I appreciate the concern around the deficit. Hopefully we're all concerned about that, right? And hopefully we have an administration that will address it. But what we have seen over the course of time is that when the deficit gets higher, the benefit has been around the growth, right? Our GDP needs to increase. If we can get an increase of GDP, it will take a bit of a relief off of the deficit at that point in time. Would you agree?
If we print more money to increase GDP, yeah, stocks will do well. I agree.
I just mean the overall growth of the economy has to increase, and we're seeing it really right now in so many different ways. I'll just do a reminder that the market is not the economy. So I don't want to confuse the two, right? It's forward thinking, forward looking. So we've got small caps, which I'm a huge believer. That's the American way, right? Which is the only reason I really think that a reduction in our interest rates is going to be a huge benefit. That's where we're going to see the growth, right, in America. And if we can get some deregulation, which I think is going to happen, I think the growth in this economy can be just amazing beyond just being a stock picker and trader and all that, what I am, but just bigger than that. It's more about the American way and really addressing the economy the way that we need to get things in order. And I think we're really on course. I mean, I think the growth can just be amazing. Look what we have going on in space. I mean, we've got satellites everywhere. We've got mobile. We've got just the AI components. We've got the robotics.
Okay.
The autonomy is just beautiful right now. Okay, I'll stop.
Magic Angela says autonomy is beautiful.
Yeah, I mean, look, look. If you made money, I don't.
Yeah, you're just gonna repeat yourself again. We have Machine on the board. I have some questions for him. So let's go to that. Machine, you said that you would short Tesla at 250. Did you?
At 250?
Yeah.
No. No, I said if it got this latest round, that 270 was before RoboTaxi event, and then after earnings, I haven't said anything except for if it went past 300, which now it has, and I haven't shorted it yet. I am thinking about it now, just short term. I don't think this is not a long-term play. I think the company's obviously doing very well. We looked at the earnings last time. Obviously, this reaction to the election is, I would say, definitely higher than I expected. But congrats to everyone who's holding. That's an amazing return, even in just 1 week. What is it, 30, 40% up? I'm checking just in the last 5 days, 40%. That's hard to beat. And at the same time, usually not something that doesn't have a correction down a bit. So we'll see. I might short it a bit, maybe out the money calls. But either way, I think the company's in a healthy position. It's interesting, the reaction so much to Trump being elected. I get some of the reasons, assuming there's not going to be any litigation against Musk. There's going to be freeing of restrictions. I get that. However, at the same time, a lot of what people are talking about in terms of deregulation and whatnot are long-term, maybe benefits. But the CEO himself has said, if they enact the sort of clearing out of the government that they want to do, expect short-term pain. And I think that short-term pain, if that actually happened, would also affect Tesla sales. I don't know. So I don't know what to think of it. I think congrats to people, especially people who bought around $150 or lower. You have doubled your money in 6 months. That is amazing.
Machine, what level of miles per critical intervention do you think is necessary for robotaxis?
Of course, it depends on how we define critical interventions. So
Accident.
If we say accidents, you for whatever area you're operating in, you need to be at least 100,000 miles per accident, I'm guessing. Obviously, it depends on the type of accident, because it's going to come down to the cost of.
But humans are at 500,000, right? So why would 100,000 be necessary?
But that's what I'm saying. It depends on. That's like the lower limit. I agree with you. It could be higher. I think it depends on the type of accidents that happen. If robotaxi accidents are more benign because the cars are more careful, they still make accidents, but they're not flying at 80 miles an hour into another car, which does happen. The catastrophic costs maybe are less. So the average cost per accident maybe is lower, and therefore you could afford to have them operate at a lower accident rate. I'm not sure. I don't do insurance. I don't know. Tesla can model that out maybe.
Do
No
you
one's given
think
us information.
Trump's victory makes that easier to achieve at the federal level?
I don't know. I mean, Tesla doesn't need federal approval to operate robotaxis right now. There are many states they could operate robotaxis right now if they so choose. So I don't think this is a limiting factor for them at this point.
Okay. You had said that you expected number of rides, percentage of rides without a critical intervention to get to 99% at the end of September. Currently, it's at, let's look at it right now, Tesla FSD tracker.com. Today is November 11, a month and a half after September 30th. And currently it's at that disengagements. Critical, 95%. And since we made the bet earlier this year, that percentage actually declined. So why were you so off?
Well, basically, anytime I actually try to trust the words that come out of the CEO's mouth, I'm wrong.
Okay. Why do you think you were wrong, though?
Because the critical intervention rate, my 3x and then another 3x, like he said they would. So there you go. It didn't happen.
What do you think V13? So are you gonna, first of all, are you gonna send me my coffee money? He left. Anyway, oh, there he is. Machine,
Sorry, I couldn't hear you, so I had to reconnect. What'd you say?
you gonna send me my coffee?
Yeah, I can send you a coffee.
Do it right now. What are you waiting for?
I don't even use Venmo. I have to I gotta sign that
do
up.
Venmo, PayPal. You can tip on X $5. It's just $5.
Yeah, I'll do it. I'll set it up.
How cheap are you?
I'll do it. I got no problem.
Okay, do it right now. We're waiting.
No, I don't have to set up my accounts.
Do it on YouTube with a super chat, $5. Coffee.
None of my accounts are set up right now.
Do you have any accounts? Are you like an Amish person? What's going on?
I have PayPal.
You have PayPal? Okay, send it on PayPal.
I will. Send me
Go ahead.
info.
Yaman Tazar. It's literally my name.
Is there an at? Okay.
No, it's
email?
just that. Yaman.
There's no email?
No. Yaman TASDIVAR.
Okay, that's your username. Okay, let me go check.
We're waiting right now, Cole. We're all waiting.
Why are you
1,000 people are waiting for you to send me this coffee money.
Why?
How many bets did you lose? You have never sent me coffee.
This is ridiculous because we know how many bets you've lost to me.
Well, we're just talking about you right now. We're just talking about
4 in a row. And
you've lost a ton.
No. I think I'm still ahead of you, and I think you know it deep down.
I don't think so.
And
I don't think so.
want to know why someone who's allegedly long in Tesla stock, who's seen their portfolio go up 40% last week, is pining for $5 coffee.
Let's see. M is for machine. Did you send it yet?
Give me a second, Jesus Christ.
Okay. You had more than a second, sir.
Also, I'm on a new computer, so I need to do all that verification stuff.
Okay. Let's see. How's it going over there? Were you able to open PayPal?
Yeah, I just got my code. My PayPal balance, $20 right now.
Okay.
So Yaman Tazdivar. I'm going to do this for you, even though
Good.
we both know you owe me more coffee bets, but I'm going to make
Bullshit.
you feel, there you
Look,
are.
we have another one. Used Tesla average listing prices 31,345. You said more, I said less, and it's right now 31,317. So make it 10 while you're at it.
No, I just sent you 5. There you go. It's about to be sent. There you go. You'll see what it was for. I put the memo for what it's for.
Let's see. Recent activity. All right, I won't take a screenshot of this because it's got your name and everything, but thank you for finally paying off one of your bets. Stay tuned for more. Bull.
Yeah, at some point, Machine's going to lose so many bets, he should get one of the advertisements for the show.
Yes, exactly. Alexander.
Yeah, Machine, you have to send me money as well for all the free education you got in Sweden. However, I have a question for you. Do you think Trump presidency will lower compute costs?
I think Machine is speechless after he had to send me $5. He's crying.
First of
At
all,
work. His head is down on his work desk right now and just weeping.
first of all,
Tears coming down fast from both sides of his cheek. He's trying to hide the tears from his boss and from this girl that he's hitting on, but but it's not happening. It's okay. Jeffrey Jones also sent $5 in your name, so now I got 2 coffees, and Chris became a new member. Thank you very much, everybody. Let me just say a quick thank you to also Jake McCombs for the $28 Canadian dollars. That's all the coffee. Machine.
First of all, I paid $50 for my master's degree in Sweden. That's a big embarrassment for Sweden. I mean, think about that. They let me into the country, and that by itself was a deterrent to the growth and culture of such a country. And, I'm not paying any more money to anyone. You got your money. Go. You can't even afford a Starbucks coffee with it. So I don't know. Go find the homeless guy in the corner in Austin and ask him to stir you some Nescafe.
Okay. I have more questions from Machine, so let's keep this tight. Dallas, what's your question?
Yeah, Machine, who was the founder of PayPal, one of the co-founders? I'm blanking on his name.
Peter Thiel and David Sachs. You know the answer there. No one else. 0 other people.
Alexander.
What about my question?
What's your question?
I asked if, Machine, do you think that Trump presidency will lower compute cost?
I'm not really sure what he would do he would add, usually he's just going to add tariffs. I don't know what he's going to do to increase supply of compute in the US. I'm not really sure.
All right. Any other questions, comments? Machine. So you said 100,000 miles per critical intervention is enough. Interesting. For RoboTaxi service. That's amazing. That's hell of a claim.
Well, part of the accident rate and cost, when you look at those numbers, are looking at all regions of the US, highways, city streets. It'd be interesting to know, if you're just looking at urban environments, what are the costs of accidents, and robo-taxis, what would the cost be for these incidents at 100,000 miles per incident? So I just think we don't know what the definitive number is. I think it'd be good to try to model that out. I don't know. I agree with you. It seems like you could argue why it would need to be higher, but I'm trying to give some Bayesian probabilistic modeling to it that I think the cost per accident would be lower than humans.
Okay, by the way, you won a coffee bet. Now that we're reviewing our coffee bets, you won a coffee bet against ACDC. Oh, actually, no, you didn't. He won because the bet was Tesla will unveil a new vehicle without steering wheel on 8/8. So make sure you pay him as well.
What are you talking about? I was the first one. Do you remember the reason why I had to change my account? Do you remember?
No.
It's because I announced what I heard from employees about the unveiling of a RoboTaxi vehicle, which then they delayed for another year. And you're gonna tell me I said they're not gonna unveil a RoboTaxi vehicle?
No, this was for the 8/8 event, and they didn't. 8/8 event got pushed out.
That's ridiculous. This is about them changing the date. Is that what you're saying?
Yeah. Well,
no, that doesn't count. Come on.
Of course it does. Bets are verbatim. That's why we obsess about the wording of these bets. Tesla Robotaxi is vision only. You lost a bet against Omar as well. You said radar is going to be included.
Was that a coffee bet?
Yeah.
Well, we actually have to wait and see when the vehicle is produced.
I'll pin that to top right here.
We gotta wait and see when the vehicle is produced.
Okay. Yeah, we can't wait for that. So maybe you think they're going to change it. Let's see what else we got here. Oh, you lost the one on the SMCI, new ATH. You predict a new ATH in 2024 SMCI as of after May 2nd. And the company basically is headed down now because of all the accounting issues.
Hey.
So while you have your PayPal open, shoot that over as well.
Hey, we still got time. There's still
a
month and a half left.
Sure. Let's see what else we got here. I mean, I think your biggest call right now outstanding is Optimus beats RoboTaxis to $1 billion profit. And you and me are on the yes side, and Omar and Meta are on the no side of that bet. That's probably a big bet, biggest bet right now. You still feel confident about that?
That was the most grandiose bet. I feel similar to before. I mean, I feel like there's still a good chance. I think when we made the bet, people were thinking on the other side of the bet that robo-taxis would be here by now, given their bets on other aspects, and it's not. And that's not to say great progress hasn't been made, but the actual getting to the technical level that's needed has still not happened. And on top of that, then you have the whole operational aspect of building up the robotaxi business, which has not happened. And we know from their own words that really they're only going to start building the robotaxi in volume probably not until 2027. I mean, I could argue a bit in 2026. So I think it'd be worth taking back and modeling that out based on that growth. Now, at the same time, I think you could argue they've been more clear with their Optimus growth trajectory. And I haven't looked at it, but I bet if you took their words on the Optimus growth trajectory, that it's going to be later than the robotaxi. And from that end, then maybe you could argue we're in a worse position than we were before. But I haven't looked at those numbers.
Okay, well, Omar's here to collect his, argue his side of the bet here. Omar, we are back to that age-old coffee bet. This coffee bet has been around for a long time. It's been debated on dozens and dozens of spaces, and yet we still don't really have an answer. And the bet is which one will beat the other to $1 billion in cumulative profits, Optimus or robotaxis? And I'm with Machine still that it's going to be Optimus, and you and Meta, I believe, still think it's going to be robotaxis, right?
Yep.
So no one has changed their position still a year after we made this bet, which is incredible. That's a hell of a bet. I don't think there's any other example of it like this before. All right. Omar, what's new with you?
Nothing much. Just slept in a little bit today, but I mean, I think FSD and Optimus, if you just go based off the timelines they mentioned, we're really several years away from Optimus being used in other factories, let alone, sold as a consumer product. FSD is already generating billions of dollars of supervised revenue. As soon as they go unsupervised, it's really just a matter of time.
Let me ask you a near-term question here, which I think Machine maybe can chime into too. And I really want to understand your kind of what you're actually predicting, because I'm not 100% clear on this yet. You said Tesla Automotive margins will get back up to record levels even before FSD unsupervised goes live. Is that right? So 30% Tesla Automotive margin, gross margin.
Yeah. I said including FSD supervised, if you include that in automotive gross margin, which they do, but I'm just saying that, maybe they break it out in the future or something. Inclusive of FSD, margins are probably going to roughly double.
Okay. Machine, what do you think of that prediction? Omar says, including FSD supervised, but before FSD unsupervised, Tesla Automotive gross margin will double from here. So more than 30%.
I think that's not happening. And listen, I've been on the board of FSD supervised with boost margins for 3 years, including fatally making a bad selling put spreads deep out of the money on the assumption, the margins couldn't go down that much because FSD supervised will keep them up high. I think they will boost it a bit, but I think if you go model out, which I had done a few months ago, the boost to margins that if you assumed every car in the fleet was paying $50 a month for this service, what that would add to margins and to gross profits it's significant, but it's not doubling the gross margins. It might add a few percent. I mean, I wouldn't quote me on that. I have to go check. So I think, yes, it can boost gross margins. Could we be at the bottom of gross margins? We could be. I think, I'd bet more than 50% chance that's the case, but it's not going to double it. It's not going up to 30% gross margins. And most of that would be due to FSD because they've cut the cost. They're getting better COG reduction out of it. They've gotten gross margins up a bit. Yes, I think, everyone's really positive with spending, and now they think everyone's going to suddenly start buying Teslas like crazy. That's yet to be seen. I don't know how much they're going to be able to raise prices yet. So I think maybe they can increase gross margins 5%.
Okay. By the way, Habib sent me a Venmo machine and said, boom, before machine. So there you go. There might be some audio issues on X today. If you're having audio issues, head over to YouTube channel through the link at the top of our screens. We have record concurrent viewers right now on YouTube. And if you're watching on YouTube, hit the like button and subscribe to the channel and help us grow the channel so that we can bring you more coffee bets that machine loses. Bull 2035.
Yeah, I see Omar rejoined us here. I had a question for him on his gross profit. Omar, are you expecting prices to be raised at Tesla? And then part two, other than battery, are there other costs that you think are going to go down for Tesla?
Well, Cogs are continuing to come down from pandemic levels, which were just over the top. That's sort of happening naturally and filtering its way into Cogs. The company is also driving Cogs reductions through, for example, the next gen platform. So really it's pretty simple. Okay, what's the impact of FSD supervised being available globally for the business? An FSD user is basically twice as profitable in terms of their lifetime value to the company compared to a non-FSD user. So when we reached record gross margins in the past, it was purely because there was a shortage of cars globally. So we've really been in a down period. Some people call it an EV hangover. Some people might call it an oversaturation of the market. So the core auto business has really been operating at reduced levels of profitability. There have been companies like Fiscal dumping their EVs onto the market. Like, please take them for free. We'll pay you to take them. Incentives of $20,000. This has resulted in a lower level of gross profit. So you just want to, look at, okay, what is the long-term sustained level? Let's say that, Rivian is not making as many cars, others are not making as many cars. You essentially have more pricing power, right? And with regulation like the EV tax credit gone, which are, I think, pressing margin to some extent with regulations like the price cap, you see all of that unwinding. Now, at the same time, you've got FSD supervised expanding worldwide, right? So the North American market has it, but the European market has never had it before. The Chinese market has never had it before. They sell a whole lot of cars in China. And as it gets better, I expect US to also be purchasing it more, which you've already started to see happen. So you combine all these things and you really look at a situation where, first off, the lifetime value of the user is increasing because of FSD. But B, also that the differentiation of FSD pushes people to buy the cars more, pushes people to buy the car as opposed to, let's say, a Fisker or a Rivian, because those cars don't actually have this feature that they really care about. So the combination of those two things, essentially, a shortage of FSD capable cars, plus the actual FSD revenue itself, which comes on top of the automotive revenue, can come for old cars, things like that. The combination of those things, I think, will push margins to record levels above 30%. And I think it's really just kind of an anomaly that mega packs have higher margin than the car. I mean, the mega pack is actually probably less differentiated than the car, and just is not dealing with a situation where you're seeing all these brands dumped into the auto market at a huge loss. So that's the reasoning behind my prediction that as FSD supervised is available worldwide, you'll probably see Tesla's margins start heading in the other direction and approaching record levels. I don't think that within 3 to 5 years, it's crazy to, in a best case scenario, see margins of around 40% FSD inclusive.
Bull 2035.
Yeah, and I read Jeff Lutz's writings, and I think you do too, Omar. And he's predicted accurately an ongoing 5-7% reduction in costs each year. Some battery related, some not. So I think I know what Machine's criticizing your numbers, but if you're right on FSD and Jeff Lutz is right on these other reductions, we might get there.
Well,
Omar,
anything.
Machine says earlier that FSD will add maybe 4 or 5%, but it's not going to double gross margins. But now you went up to 40%, right?
I mean, they've got an extremely differentiated product here. This car is just driving me around everywhere. So yesterday I went to Burbank. It's like magic, this thing on the highway. Like, your jaw's just on the floor. This is an extremely differentiated product. Now, let's just do some basic math here, right? So they've got a car for $42,000. And the automotive gross margin is something like 19%. So that's about, $7,980, or roughly the price of FSD. Now, a marginal FSD sale, they don't need to add any more GPUs. They don't need to add anything. it really just flows directly through. The software itself costs nothing. It's all the fixed cost that is required to produce it that costs money. So you start to see how if a user subscribes or buys FSD, the profit on the car can basically double.
Machine, what do you say to that?
I wasn't really paying attention. Sorry.
I mean, I guess where you guys disagree is the take rate for FSD, right? So Omar believes that in the next few quarters, take rate on FSD will go up to 20, 30, 40, 50%. And Machine thinks it's going to take a few more years. Machine?
Yeah, I mean, I think it's interesting because the dominant reason that Donald J. Trump was elected is because of inflation and people's concerns about affordability. And at the same time, the same people who agree with that are thinking, yeah, everyone's going to start spending $100 a month on supervised FSD. And I simply do not think there's going to be enough people to spend that much money.
You know, Omar, do you agree that Machine has been, in recent years, more accurate predicting mass market behavior than you have?
No, I mean, I think he's been a lot wrong on a lot of things. You can't really, obviously look at this and say, oh, people are never going to subscribe. At some point, Tesla will just simply not sell cars without FSD at all. They won't even give you a choice. So right now you buy it, it comes with a 1 month free trial. This is something that is a subscription right now in the supervised stage. They need some way to make money. Autopilot used to be something that you had to pay for. You had to pay $3,000. Believe it or not, there's actually some Model 3s out there that don't have autopilot. And then they just said, okay, we're going to raise the price $3,000 and now you have to buy FSD. And since then, everybody bought autopilot, you know? So to argue that, oh, how are they going to get people to buy this? They can simply force people to buy it when the demand is high enough. They can say, okay, we're going to prioritize orders with FSD. And okay, we're going to deliver these. There's, what I'm predicting essentially is a shortage of Teslas, right? Because they're the only cars that can do this. The demand for this technology is going to far outstrip the supply that Tesla can produce in any given year. And that's what's really going to drive the pricing dynamics. Everybody's coming out of a few years of not a shortage, a glut of EVs.
Yeah.
So it's difficult for us in this mindset to imagine another shortage, even though we've seen it happen before just a few years ago.
Let's focus on that. So, Machine, Omar says that there will be a shortage of Teslas, driven primarily by how good FSD is getting. On the other hand, in one of the daily podcasts I listen to that informs what we discuss in here sometimes from a legacy automaker perspective, there was a huge surge in EV leases back in 2022, 2023, and 2024. We're talking over the course of those 3 years, a 10x increase in EV leases because of the loophole that when you lease an EV, all leases qualify for the $7,500 tax credit. No limits apply. So now, at the end of 2025 and 2026, this flood of leases, EV leases, will come back to market as used EVs and will drive used EV prices down materially. Machine, do you expect a shortage of Teslas in the coming 1-2 years?
No. So I think let's break this down into two aspects. One is the core, just demand for Tesla EVs, and then there's the supervised FSD aspect. For the core aspect of Tesla EVs, I believe there's going to be solid demand in general. There might even be demand growth at the same prices, sale prices. However, the big elephant in the room on that aspect is the fact that there's a good chance maybe down the line, maybe they take away the IRA tax credit, and that would materially affect the affordability of Tesla EVs. Now, I don't know how long it would take for that to be enacted. I'm not following all the regulations. It could be something where short term it actually helps Tesla because people start pulling forward their purchases to get the credit. And medium term, it only shows up. I don't know. So you have that aspect. The aspect for FSD supervised, I simply think it's a really cool technology, but I don't think there's that many people who really want to pay a lot of money for this if they still have to pay attention and drive their car. So if this thing becomes L3, where the car is going to notify them when they have to take over, maybe then it becomes a higher utility and more people will pay for it. But otherwise, as we know, because as Yaman knows, you can go look at the used car sales for Teslas and what FSD is valued for. Right now, even with the capability on V12, V13, it's not valued that highly. So you're making huge speculations that all of a sudden it's going to jump in utility, that all these people are going to want FSD supervised. I don't know about that. FSD unsupervised, totally different game.
Yeah, I agree. Even if the technology can say, I think this is also unlikely, but let's say, for example, that the technology had a step change in performance. And all of a sudden we went from 95, 96, 97 personal drives having no critical interventions to 99.9%. And it's a clear path that we're going to get to FSD unsupervised and RoboTaxi in the next like 2-3 years. Even if that happens, I think the fact that over the last 10 years, people have been kind of like being promised FSD unsupervised and robotaxis, and your car is going to go from across one side of the country to the other side of the country with a push of a button and all that. That will slow down, I think, people's believing the facts, even when the facts are there. And I think even the facts are not going to be there in the timeline that Omar expects. Omar?
Yeah, I mean, as usual, listening to Machine talk about this is like listening to McLovin talk about sex. He just has no clue what he's talking about because he doesn't use it, right? So, I mean, people love FSD supervised without an ag, and in very recent times, it's just taken off like a rocket. He's saying, notify you when you need to take over. The thing just doesn't require you to take over. You should see the crazy stuff this thing is doing, and it doesn't need any help. So supervised, unsupervised, people love this, okay? You just show it to people, ordinary people, like my aunt. She wasn't using FSD or even basic autopilot on her Tesla for years. She was like, oh, you have to show me how to use it. You have to teach me how to use it. She started using FSD supervised, no nag. She's like, oh my God, this changed my life. Like my girlfriend, ordinary people who aren't tech people, it's turned the corner for them. But, it's just so crazy that so many bulls are still kind of in disbelief of what's happening. They're just making rapid step change improvement in FSD. And it's so obvious. How could you even question it? That this is going to be something that every American wants to have in their car. I mean, like some guy was on his bike and just jumped out in front of my car. My car just automatically reacted before I even could. Some guy walked in front of the car. All this stuff. It's a second set of eyes. It's there. Everyone's going to need this. So you just do the basic math. There's 280 million cars in the United States. Okay? Every single one of those cars, they will want to replace it with a car that can drive itself or at least has very advanced driver assistance as people get used to this. Tesla has global production capacity for 2 million cars. Out of that, about 600,000 is destined for the United States. So demand for 280 million, even if you want to say, okay, 90% of people aren't going to adopt it, it's just going to be 28 million who are interested. The demand and the supply are in a different universe from each other, right? And normal car replacement cycles, people don't care. Okay, well, I already have a car. I don't need a new car, right? For something like this, something as game-changing as this, the replacement cycle accelerates. So you just do the basic math. And it's very likely that we're going to enter a shortage. The supervised, unsupervised, it's supervised. It's just, you kind of have to laugh at that.
Well, I just created a poll on YouTube for the couple hundred people watching concurrently on YouTube right now. You can answer the poll question. When FSD unsupervised in at least 2 states, 2025, 2026, 2027, or 2028 or later. So let your vote be known and leave your explanation in YouTube live chat. Machine.
Yeah, again, he blurs the line between supervised and unsupervised. People like it as a nice gimmick, but when you got to look at where you're going still for an hour, day after day, it's nice. It adds safety. Absolutely. I agree with that. Who wouldn't want this technology if they could get it for free? But the question is, how much are people willing to pay for supervised FSD that you still have to pay attention to? I don't think it's $100 per month for all cars. So you have to make some more reasonable assumptions about what people can afford, and a large quantity of people, especially if we've had inflation and all these people are upset about that. I'm hesitant to think it's going to be $100 per month for everyone in every car. I modeled out before on average $30 to $50 per car. I think that's
people are poor, man. They don't have $100 to spare on technology that they can do. They can feel that they can do themselves. The number of early adopters on technology like FSD is actually not that many, especially if it's not perfect. So I agree with Machine. I think unless the price comes down substantially, let's say for example, $2,000-$3,000 to purchase or $49 a month, maybe then we'll see an increase. But at that point, like, is that really material to the bottom line? So I'm not, finding myself on the same side as Machine again. I do think Optimus will get to $1 billion in profits quicker. Any other comments on this topic? Let me see what YouTube is voting right now. We have 52% of votes say FSD unsupervised in at least 2 states, which is probably going to be California and Texas in 2025. So majority says 2025. Machine. Once again, majority of my listeners and viewers hate you and want your internet connection to die. Omar.
Yeah, I think it's kind of a funny argument to say new technology won't be adopted because it's too expensive. Technology always rapidly declines in price. This is like saying, oh, who's going to buy a cell phone? It's $5,000. This technology is going to be free for everyone to use long term. As a matter of fact, in cases, they'll actually pay you to use it if you own a car, right? So the price is, something that I think is not really a factor you should look at when looking at technology adoption.
Machine, I see you're laughing. Why?
I mean, this guy just
Omar has driven every single Tesla. He has owned every single Tesla. He has, I think, 2 Teslas in his garage. He just bought a home. He's feeling good. He's seen his stock price go up and his account value go up by millions of dollars. And, maybe he thinks that the rest of the world will agree with him on FSD.
No, what I'm saying is this guy is kicking own goals. He just said that the price will go down, and that will get more people to take the technology.
Okay.
And I agree with him.
Yeah.
If the price goes down the curve, more people will take on the technology. Not the price going up, which is what he's suggesting when he says gross margins go to 40%. So thank you, Omar, for validating my side of the argument.
Yeah. Yeah.
Now, look, when there's a shortage of cars, which direction does the price go?
All right, Omar, let me ask you this. Let's put some parameters around this shortage of cars. So Tesla right now has 3 million annualized production capacity across its factories. When do you think Tesla's deliveries will rise above 3 million per year?
Based on their guidance, 2026.
Machine?
I'm sorry, what was the question?
So the production capacity for Tesla right now, global production capacity is 3 million. Omar is predicting a shortage of Teslas. When will demand / deliveries will rise above 3 million per year?
They're going to grow 20, 30% a year right now, and they're going to deliver a bit under 2 million this year. What, probably 1.8, 1.9. So I'm just going to go with 30% growth, and in 2 years you'll get to like 3.2 million. So 2026 they should deliver, let's just say around 3 million, 3.2 million. So I think 2027 they'll start exceeding that production capacity significantly.
Okay, so you guys agree then. I mean, he also said 2026. So you both
I don't think there's anything
2026.
unreasonable about 30% growth. Do you? Does anyone disagree with that? His point is that demand is going to go up 100% year over year, basically at the same prices.
I don't think he said that.
Well, for there to be an extreme divergence between supply and demand must go much higher than 30% year over year.
Yeah, I mean, I guess if you are predicting 40% gross margins for Tesla Automotive, then sure, I think the demand would have to go up in such a way that Tesla would increase prices quite a bit, or FSD take rate would increase quite a bit. I don't know. Bull 2035.
Hey, Omar, we talk a lot about individuals and buying FSD. What about fleet customers? The U.S. government buys a couple 100,000 vehicles a year. States, there are a lot of corporations that buy their own vehicles. Have we heard of any push into that market by Tesla?
The writing is on the wall. Okay, we've got millions of driverless rides happening a year and growing. We've got cars like the Zoox and the Waymo and the Cybercab, which don't even have controls. Every car in the future is going to be autonomous. As a matter of fact, and especially now with the Republicans taking the White House, there's a good chance it will literally be illegal to make a new car that doesn't have autonomous technology, past 2030. So you really just kind of look at this and you say, okay, does anyone buy black and white TVs anymore? Everyone's going to need an autonomous car. What is the demand for cars roughly? It's actually a multiple of the installed base of cars today, long term. Okay. So you just look at how many units are demanded. You look at how many Tesla can supply. They are, to get caught up on, well, how many people are going to buy FSD? What's the price of FSD? Look at Autopilot. They just rolled it into the price. They said everybody has to buy Autopilot now. The car price is going up 3,000. Everybody has to buy it. Did their sales tank because the price went up 3,000? No, they were able to do that because demand was high enough to sell out their capacity even at those prices. It's the writing's on the wall. Everyone's going to need autonomy. So millions and millions of self-driving cars will have to be produced.
Okay, Machine, I want to ask you about Treasury yield. Before you joined, we talked about potential rise in Treasury yield, especially on the longer end. Jeffrey Gunlock and a couple other asset managers that have been around for for decades in the bond market are talking about potentially shorting the long end of the curve, which obviously impacts mortgage rates and also all the loan rates. So it does have an inverse relationship with car demand. So it relates to Tesla. Do you expect the long end of the Treasury yield curve to rise materially in the coming months?
This is outside of my area of expertise, but I presume that long end of the yield curve is some assumptions on what long-term inflation growth rates are going to be. And I don't see them going up too much, but I really am not a macroeconomist. So, I've focused on shorter term inflation.
Well, I don't know.
rates.
I mean, Elon has said he said, quote, America is going bankrupt, by the way, end quote. And the reason why he's saying this is because the budget deficit And if the bond market agrees with Elon Musk, then they would price bonds at the, they would price they would price the interest rates required to demand the treasuries that the Treasury is flying. So to finance the budget deficit, the bond vigilantes would require higher and higher interest rates. And in the UK last year, we saw a 150 basis point surge overnight. And if that happened, to put things in perspective in the US, that would mean 6% 10, 20-year Treasury yields. That would be huge. That would be very material to all asset prices. What do you think is the probability of that?
I mean, those are good points. I get the concern over government debt. It's not clear to me. I remember from 20, 25 years ago, concerns over government debt, and, Keynesian economists then kind of hand waving away based on debt to GDP ratios being healthy compared to other economies. Now, I haven't looked recently. Maybe you could inform us on how the United States compares in terms of all its core metrics of debt versus other aspects of the economy growing, and how that compares to other countries, to tell us a better picture of how unstable the US is becoming. I don't have a clear picture. What do you think?
Look, this is not a topic I'm an expert in. I look at people smarter than me, like you, in situations like this. And so I was wondering, maybe you could inform us. But you're right that the percent. So you're right that I'm totally kidding, by the way. You're definitely not smarter than me. But you're right that this topic has been going on for decades and decades and decades, especially after the gold standard was US moved on from the gold standard. But the debt to GDP ratio has never been as high as today. Only during COVID. It's come down a little bit since COVID. But right now, according to Fred, total public debt as a percent of gross domestic product is 120% today. And this figure in the early 2000s was 60%. So debt is definitely growing faster than GDP. What kind of piqued my interest is that these asset managers are not taking action. They're actually betting, sorting the long end of the curve. So I think this is different than in previous 10, 20 years ago, the rhetoric that you're talking about. What do you think? Can you guys hear Machine?
Oh, sorry.
Okay, go ahead.
I absolutely hear much more discussion about it from more serious people now than 20 years ago. So I do think it's gone up, and then I believe it. And I'm not surprised that debt to GDP is more higher than ever before. And that kind of puts me, personally in a position from an investment standpoint of not being too risky right now, because on one hand, it seems like you have this concern over a long end of the curve going up. On the other hand, to correct it, you would have to make massive cuts, which could be recessionary short term, which also may not be good for equity markets. So, the take home message for Tesla, we don't know, right? Obviously, higher long-term yields would not be good for loans. I don't know. Like, what do you think? I just feel like in the next year or so, there's going to be some uncertainty with the economy. I'm not predicting anything bad. I'm just saying I'm kind of staying.
I mean,
not
the
leveraged.
other pillar of this argument is that, according to Jeffrey Gundlach, the budget deficit per GDP today is at recession times levels. So the federal government only spends this much money, grows its deficit only to this level during recessionary times. So what happens if we also get a recession on top of that, and the budget deficit has to grow further? So, it's a good point. It's a risk, I believe, that investors should keep an eye on. I'm not smart enough to figure out whether it's going to happen or not. But I'm curious, Machine's perspective and also Omar's perspective as well. And Omar, on top of that, John FSD Bull says, when unsupervised, when spaces work. Go ahead.
Well, I think probably we'll get unsupervised before spaces work.
All right. What do you think about the Treasury yield curve? Potential surge in the longer end of the curve, causing a surge in auto loan rates, mortgage rates, and a subsequent price decreases, value decreases for these assets.
Well, as we mentioned before, I think there's just some uncertainty around Trump's election, the policies he's going to enact. People are throwing around all kinds of ideas. Some of them are expensive from a revenue perspective and also from a spending perspective. People have talked about, for example, the cost of a mass deportation program. Like if you really wanted to do something like that, it could be pretty costly in, you know, in terms of officers, in terms of court costs, in terms of everything. So there's some uncertainty there. I think ultimately, if they can drive the budget in a more balanced direction, it will drive yields down. It will ultimately, promote the long-term fiscal health of the United States. There's no immediate danger, so people don't really feel like it's a big deal. They go, well, we have a multi-trillion-dollar deficit. It's fine, and it's fine because really,
what do you mean by there's no immediate danger? How are you so convinced of that?
No, I think I said people believe there's no immediate danger. They don't feel like it's really like a pressing thing because we've been running multi-trillion-dollar deficits for so long. But what they're not really seeing is that this is really dependent on US Treasury securities being so highly coveted. And essentially, the market allows us to run these multi-trillion-dollar deficits to the extent that a better investment emerges. Let's say, for example, stable, cryptocurrency or something in the future, and the market is no longer willing to finance our debt or becomes skeptical of our ability to pay, our ability to get the deficits under control, and demands higher yields, then it could essentially destabilize not just US government bonds, but the private markets as well, private markets for bonds, equities, that type of thing. So it absolutely is something that needs to be brought under control. And if you did see serious action to bring it under control, which would not be politically popular, which would, probably mean cuts to major entitlement programs like Social Security and Medicare and things like that, it wouldn't be fun. But if you did see meaningful progress in that direction, then you'd probably see investors, viewing these assets as less and less risky, obviously.
Okay, great. I have one more thing to ask Omar, and thank you very much, everybody, for supporting Tesla Live on YouTube and on X. And now we're also on Spotify and Apple Podcasts. Shortly after every episode, I download the MP3 audio file and upload it to Spotify and Apple Podcasts. So you can listen to Tesla Live in all of those areas. YouTube, sometimes we show, like for example, we had a Rivian watch party, and we took away about 5-6 takeaways for Tesla investors from the Rivian watch party on Friday night. You can find that recording on YouTube as well. And yesterday we had a space, an impromptu Tesla Live on Sunday, reviewing James Catt's forecast as well. And you can find that recording on YouTube, Spotify, Apple Podcasts as well. If you're watching this on YouTube today, we have a record number of concurrent viewers. Please take a moment to like and subscribe to the channel. Like the video, subscribe to the channel, and share with as many people as you can. It looks like we're going to get to a record watch hours today, which is great for the channel. Omar, the one thing that came up in the Rivian earnings call, couple of takeaways. One of them about gross margins. They're still confident they're going to get to Q4. But interestingly, the CFO said they don't expect positive gross margin every quarter in 2025. But then there was an analyst question. That was an interesting takeaway. And we discussed that in the Rivian Watch Friday. But then there was another analyst question that talked about IRA credits. What's your plan for IRA credits? And I know from our previous chats that you're confident that the production credits, like even though the $7,500 EV tax credit may go away with the Trump administration, that Trump administration will not remove the production credits. So those would be the $45 per kilowatt hour that Tesla gets for every 4680 produced. And that adds up to thousands of dollars for, we're talking $5,000-$6,000 for a Cybertruck, each Cybertruck. Are you still confident that the Trump administration will not remove those production credits?
I'm not confident, but removing those credits would require new legislation from Congress. This legislation has been written in such a way that the Democrats like it because they like EVs, and the Republicans like it because every single dollar of capital for these new factories is in their states, right? So it's hard to really vote against something that that hurts your constituents. That guy who has a job at the factory. And oh, Senator so and so voted to repeal the tax credit we get. Now, they're idling our factory or they're cutting capacity or whatever. Someone's losing their job. That's the kind of situation they want to avoid. So that's what leads me to believe that even in a situation where the EV tax credit is taken away, either through executive discretion or new legislation in Congress, there's good reason to believe that the battery credit could continue, even though they're repealing other provisions of the IRA, just because it aligns well with their America First sort of manufacturing philosophy. Hey, if we can encourage domestic manufacturing of batteries, less reliance on China, that aligns with our sort of policy here. So the interesting thing about Rivian is they're not actually making their own batteries. They're having, for the R2, I think LG make the batteries. So LG, they get the 45 if they make them here in the United States, which they might be making them in Korea. But if they were to make them in the United States, LG would get the credit. And they might make a deal to give Rivian a little discount or something, but really they could take the cells and they could sell them to Tesla, they could sell them to GM, they could sell them to anybody. So LG really has the leverage there. They're the ones actually making the battery, which is what you get the tax credit for. Tesla, of course, would get that full 45 on the 4680 for the Cybertruck, but Rivian would either get some portion of it or none of it, depending on the terms of their contract with LG. So that could put Rivian at a further disadvantage, although most of their vehicles are already sold at prices that are too high to qualify for the EV tax credit as it is.
All right, thanks, Omar. And then 2 more questions, and then we'll call it a day. Unless likes on YouTube surges to 500. Right now, we have 280. We have 250 people watching on YouTube and 200 people listening on X. If half of you hits the like button on YouTube through the link at the top of our screens, we'll keep this space going. Omar, so there are 3 buckets of credit. Actually, let's take a 30-second break while I read the sponsor ads so that people can take a moment to hit the like button. Sometimes they don't want to do that because they don't want to miss what's being discussed. Tesla Live is sponsored by Joa, your go-to source for premium Tesla accessories. Are you looking to elevate your Tesla driving experience? Look no further than Joa. They offer a wide range of high-quality accessories designed specifically for Tesla owners who demand the best. Use promo code TSLA Live at checkout to receive a special discount on your next purchase. And Tesla Live is proudly sponsored by PayMore. Looking to upgrade your tech? Want to turn your old devices into cash? With over 100 stores nationwide, PayMore makes it easy and secure. PayMore believes that the best technology doesn't have to come at the cost of our planet or your wallet. Join the PayMore revolution today. Visit one of their stores near you or check them out online at paymore.com. Thank you, PayMore, and thank you, Joa, for sponsoring Tesla Live and the Tesla community. All right. Omar, there are 3 buckets of main credits that Tesla receives or Tesla benefits from. The EV tax credit of $7,500, which also has a $4,000 used EV credit. And I think everyone agrees that Trump administration will remove those at some point soon. The second we just talked about, the IRA production credits, and that would be $45 per kilowatt hour that Tesla receives for every 4680 that it produces. That adds up to thousands of dollars per Cybertruck, and Omar argued that even though he's not 100% confident that they will stay, they're likely to stay because the senators and the House of Reps in each state will not want to vote against it. That it would take an act of Congress. President Trump can't do it on his own. It would take an act of Congress to remove it. And they're unlikely to do that because they would be hurting the billions of dollars in investments that already went into building these production battery production facilities. I think that's a solid argument, and we'll see if that sticks around. Now, the third one is the ZEV credits that Tesla sells. And Rivian gets about $100 million per quarter selling these ZEV credits. And also Tesla gets about $800, $900 million per quarter. And both of these figures are likely to go up in the future. Now, I heard, and correct me if I'm wrong, that even though this would also take an act of Congress to remove, President Trump can make it so hard to qualify for it, that he can water it down on his own with a executive action, that it would be immaterial, even though law would still be there, even though ZEV mandates would still be there. It would be the value of these credits will go down very materially. Is that true?
Well, there are things he can do. And there are things that he will do that'll likely impact this, but it's not 100% going away. So when we talk about really like emissions credits, these are a result of multiple policies around the world that mandate how much emissions an automaker can release, right? So they go, hey guys, your average emissions per car has to be below this level, right? 25 miles per gallon, 30 miles per gallon, whatever. They have a minimum average, corporate average fuel economy standard. And they have this in Europe, they have this in China, they have this in the US. Things can move based on politics a lot, right? So these things are very inconsistent. They're coming up and down. Situations can change at the various automakers, right? They're usually trying to make sure they don't need to buy credits. But essentially, if your fleet is polluting too much, it's above the average, you can either pay a fine to the government, which is a big fat fine, or you can buy credits from somebody else who is under the limit, and you can take their sort of extra emissions credits and use them yourself. Now, the pure EV makers, they're way below their limits because they don't make any cars that pollute, right? So they have a ton of these credits, and it can be a massive revenue source for them. Rivian said, well, we're going to be gross profit positive in Q4, but it's because we're selling emissions credits to others, right? So that, some people might say that's kind of cheating. The product itself is kind of losing money, but I mean, on paper, it is revenue, right? It's related to the product. It just might not necessarily be recurring. Hence the comment that, in 2025, they're still going to be gross profit negative. But, so Trump is in favor of raising the fuel economy standards less. So he still wants them to go up, but he says like the Democrats are like overboard with 50 miles per gallon, right? In the industry, there's a lot of opposition from the industry. They're like, hey, are you guys nuts? How are we supposed to get to an average fuel economy standard of 50? That would require us to have a lot of EVs, like 30% or something. It's not possible. So that almost certainly, I think, is going to get rolled back to a less strict level, probably, somewhere between, I think, 35 and 40. That means that there are going to be less credits that need to be purchased in the US market because, people are going over less, right? As a matter of fact, they may have started preparing for the 50. So now they're good. They're, way below the limit. So he's generally not someone who wants to fine companies for polluting too much, right? He's going to be less strict on that. Then, the EPA also lets California set their own rules. California has set much stricter rules, including rules that essentially, ban gas cars beyond a certain date. And many states have actually adopted California's rules. He could revoke California's ability to set their own rules, as they have in the past. And that would, completely change the situation.
Exactly right. Omar, thank you very much. I mean, you did a great job of summarizing. We talked about 3 buckets of these credits and that impact Tesla's bottom line. I mean, these are 100%, near 100% margin credits. And Tesla has been selling them about $1 billion a quarter now, which is very material. And it's going to depend on what happens in the next, few months. And so that's why I'm watching politics very closely. And I do think Elon will continue to be involved with the Trump administration at some level going forward. I think these are very important conversations for Tesla's bottom line. We got to about 300 likes on YouTube. Okay, it's been 2 hours. We also have today the AI amateurs space at night, 8 p.m. Eastern, 7 p.m. Central, 5 p.m. Pacific. I hope that you all welcome, join us over there. The AI conversations in AI amateurs inform our discussions in Tesla Live. I mean, I've heard many people say, because of those AI amateurs, they kind of tend to understand FSD and Optimus discussion in Tesla Live better. So highly recommend people come join us tonight at AI Amateurs, 8 p.m. Eastern, 7 p.m. Pacific, Central, and 5 p.m. Pacific. All right. Thank you very much. And thank you, Nick L, for the $10 super chat, and True to a T for the $5 super chat, and to all of you who sent Venmo and PayPal. And it was a great conversation. Highly recommend you all listen to it from the beginning. If you had audio issues on X, go to YouTube and listen there. The audio quality today was much better on YouTube. Hit like and subscribe and share the video with your friends, family, colleagues, and Tesla Q Shorts. Thank you very much, everybody. I'll chat with you all in a few hours in AI Amateurs. Take care.